Good morning, dear students. You are welcome for another video presentation class of Redemption of Preferred Shares and Corporate Accounting, Bangalore, North University. If this is the first time you are watching or many others students are watching, please subscribe to this particular channel, SSD Benchmark. Okay, so let everybody subscribe and get the benefit out of this particular video lecture series. This is Suresh Babu from Government First Grade College, Gauri Bignors. So let me take all of you through the video presentation, what I have today. This is what redemption of preference shares. You must be always having this particular thing in your mind that before proceeding further, what you are supposed to do, according to the provisions, every day read the provisions, right? The way in which the redemption of preference shares are going to happen, okay? Then write the journal entries, common journal entries, very, very important. And you look into the sum, whether the redemption is on par or at premium. For redemption, how much nominal capital is required? For premium, how much premium is also required? So, for the purpose of redemption, then you can use what? Divisible profits, both for nominal amount of preference share capital and premium, correct? If the premium is available in the balance sheet or by the issue of new equity or preference shares, if the premium is received, that premium should be, suppose you are going to use for the purpose of premium on redemption of preference shares. And if the money is in shortage, if the previous sum you could have noticed, you have made a particular arrangement by what? Bank overdraft facility, you have had it, right? So similarly, if in another sum, if the money available is less, then you can sell the current assets as well on par, at discount or at premium according to the situation and the terms and conditions of the sum. So what is the takeaway problem on journal entries and balance sheet? So Fortune Limited redeems its fully paid preference shares at a premium of 20%. Make this 20% premium for this purpose. It makes a fresh issue of 5,000 equity shares of rupees 10 each. At par, that means 5,000 into 10, 50,000 rupees is being received, right? At par, right? On this one. And sells its investments at a loss of 5%. This is very important, notable, right? So that's the reason why I am writing this in bracket, okay? So you are selling the investments at a loss of 5% because you don't have enough cash available in your hands. Then, on the date of redemption of preference share, the company's balance sheet stood as under fixed assets 21 lakh, investments 4 lakhs, bank and cash 2 lakhs, other current assets 3 lakhs. So investments you are selling at what rate? 5%. So 5% loss means 4 5 are 20. So that is minus 20,000. So that means how much you are getting? 3,80,000 cash, correct? So bank account data 3,80,000 debit, profit and loss account data 20,000 debit, to investments account 4 lakhs credit. That should be the journal entry for this purpose, sale of investments at loss. Then equity share capital 8 lakh rupees, redeemable preference share capital, how much you have? 4 lakhs, correct? And here preference share capital 100 rupees, partly paid up you have 2 lakh rupees. So that means, so here two types of preference shares you have. One is fully paid up, another one is partly paid up. So company is deciding to redeem its fully paid preference shares. It's very, very important. See, fully paid preference shares only to be redeemed. So that means, so this is not applicable. Don't take this. This will continue. But this will be redeemed. How much? 4 lakhs. 20% premium means 80,000. 4 lakh preference share capital, 80,000 premium on preference share capital. So put together 4,80,000 rupees to be given. Then capital redemption reserve, you have already 2 lakh rupees. Security premium, 10,000 you have. And you are giving premium 20%, correct? Already you have 10,000 rupees here. So 4 lakhs, 20% means 80,000. But you have only 10,000 rupees securities premium. The 70,000 rupees is being required. So that you could get from profit and loss account, 5 lakh 90,000, okay, which is divisible profit. What happens? See, out of this 5 lakh 70,000, right? How much is available? That is to be calculated properly. So when you are selling investments, there is a loss of 20,000, 0.2 I am writing. Okay. This is K. This is K. K means 1,000. So now how much you have? 5.7. So out of 5 lakh 90,000, 20,000 minus 5 lakh 70,000, you have, correct now? Then out of this, it is very, very important. How much is required for you? 4,80,000 is required. Correct now? You are selling the securities as well. Okay, let us see. This one you keep in your mind. This is very important. Okay. Then current liabilities 8 lakh rupees, total 30 lakh rupees is the balance sheet. Pause the journal entries and show the balance sheet after redemption. This is one. First one. See, redeemable preference share capital account data 4 lakhs. Premium data 80,000. Two redeemable preference shareholders fund 4,80,000. Must and should you have to write the narration. Next, we are going for new issue. Bank account data 50,000. Two equity share capital account 50,000. 50,000 rupees has been received. Correct now? So out of 4 lakh, 50,000 you have received for by the new issue. How much share capital is needed for the redemption of preference share capital, nominal capital, 3,50,000 rupees. To that extent, see, this is the first, this is the second, right? So what you can do, right? The third one, you can write. The fifth one they have done. You can write the third one. That is profit and loss account data, 3,50,000. To capital redemption reserve account, 3,50,000. How come? See, 4 lakh you needed, correct? How much you are getting from the new issue? 50,000 rupees. How much balance? 3,50,000. So this is how, if you write 1, 2, and 3 journal entries, so there won't be confusion at all. So nominal capital settled. Now, what you need? 80,000 securities premium. Securities premium, how much you have? 10,000 rupees in the balance sheet. How much more needed? 70,000. Correct now? So securities premium account data, 10,000. Profit and loss account data, 70,000. Two premium on preference shares account, 80,000 rupees. Correct? So share capital adjusted, share premium also has been adjusted. Now you don't have sufficient money. What you need to do? You need to sell the investments at loss. So bank account data 3,80,000. Profit and loss account data 20,000. This is loss. So only debited to investments account 4 lakh rupees. Okay. Being sale of investments at loss. Okay. Now you have got full money with you. How much you need? 4,80,000. It is there with you. How come? So this 3,80,000 rupees is being received, right? Cash received because you're selling the investment. This 50,000 rupees has also been received, 4,30,000 rupees. And in the balance sheet, you have 2 lakh rupees. So that means more than 4,80,000 is available. Now you pay. So preference shareholders account 4,80,000 to bank account 4,80,000 being redemption of preference shares. Now see the balance sheet reconstructed or after the redemption balance sheet, shareholders fund, share capital, issued, subscribed, called upon, paid. Okay, how many shares we have issued? 5,000 shares. I think we have issued more, correct? 50,000 rupees. So that has to be recorded here. So in the share capital, check here balance sheet, how much? In the sum, you have 8 lakhs, correct? So how many shares were issued? 5,000 shares, additional issued, 10 rupees, 50,000 rupees, 8 lakh, 50,000 rupees. See here, 8 lakh, 50,000. Equity shares of rupees 10 each. So preference shares partly paid up will continue. Partly paid up will continue 2 lakh rupees because these shares were not redeemed. So this is to be noted. Then reserves and surplus capital redemption reserve we have not used, right, as it is 5,50,000. Profit and loss account we have used, right, inner column 5,90,000. Minus 20,000 loss on sale of investments. Minus 70,000 premium for which this money was used. And minus 3,50,000 for the preference share capital. We have transferred this amount to capital redemption reserve. Then how much you have? 1 lakh 50,000 rupees. Correct? So here, capital redemption reserve in the balance sheet, you had 2 lakhs. Correct? So 2 lakhs earlier in the balance sheet plus. Okay. This 3,50,000 additional. We have created one journal entry. So total 5,50,000. And non-current liabilities, secured loans nil, unsecured loans nil, current liabilities, you have 8 lakh rupees. Total is 25,50,000 on liabilities side. Asset side, non-current assets, fixed assets, 21 lakh, right as it is. And current assets, okay. So other current assets as it is 3 lakh rupees you will write. And bank C, 2 lakh rupees you have. And you are receiving 50,000 rupees by the issue of new shares. So 2,50,000 plus 3,80,000 sale of investments you are making, and minus 4,80,000 redemption of preference shares to the preference shareholders. You have paid the money. Balance is 1,50,000 rupees. Check once again the total 25,50,000 rupees. Okay. So homework, I will say. I don't say how many times. I will not say. It is up to you. So do the homework and submit. Send the copy. And I have the records. Once I will be back next week into the classes, I will check with each and every student your notes. Okay, whether you have written or not, you have practiced or not. So 2 things I will be checking. One is your notes and your practiced sums. Every student of section, second bcom, section C and section D. Don't take it for granted. So this is up to you. And how will you answer? Okay. So take it seriously, and still due to the training in the university what I'm attending, so it may take another a couple of days. So once it gets over, I'll be back into the normal offline classes. Okay, so please watch, and 1 minute by minute watch and what the contents. Okay, so please mention in the feedback. Thank you all.